Today I'm breaking down CREB's 2026 forecast for Calgary and the surrounding region. What it says, what it really means, and how I would use it if I were making a move in 2026. This forecast is prepared by CREB's Chief Economist, and the headline is simple. Calgary is expected to stay in balance to buyer's market condition throughout the year, and the experience will vary a lot depending on property type. So, if you only remember one thing from this video, remember this. 2026 is not one market. It is a few markets moving at different speeds. Let's start with the why. In 2025, Calgary shifted away from the seller's heavy conditions we have gotten used to. Supply improved across new homes, rentals and resale, while demand cooled back more towards typical levels. That reduced pressure on prices, especially in apartments and row homes. For 2026, the forecast expects demand to remain fairly stable, not surge, and the big reason is that migration is expected to slow. Alberta's population growth is forecast around 1.5% in 2026, and Calgary around 1.3%. That is still growth, just not the same pace we felt over the last few years. On the economic side, the backdrop is steady, not explosive. The forecast points to a stable rate environment with the overnight target rate holding at 2.25% throughout the year. Employment growth is expected to cool to about 0.4% in 2026. The unemployment is forecast around 7.4%. In plain language, the economy is expected to keep moving forward, but not at the pace that creates a new demand shock in housing. Now, here is where the story gets important. That is supply. Even though starts are expected to ease, the pipeline is still large. Calgary housing starts are forecast at 18,415 in 2026, which is down 34%. But the market is still absorbing what is already underway. The report highlights there are over 26,000 units under construction, and a meaningful share of the supply growth are apartment-style rentals and ownership units. This is also why rental matters in 2026 more than people think. There are still over 11,801 purpose-built rental units under construction. And with a slower migration, it can take longer to absorb that supply. The report suggests elevated vacancy rates can persist, which places downward pressure on asking rents. For context, the forecast shows an average two-bedroom rent of about $1,908 in Calgary. Why this matter if you're buying or selling? Because rental pressure influences entry-level ownership. Softer rents can reduce urgency to buy for some renters, and it can change the math for some investors. That tends to show up first and most clearly in condos, to a lesser extent townhouses. Now, let's into property type forecast for City of Calgary, because this is where the practical decisions get made. Overall, CREB forecasts 22,200 total residential sales in Calgary in this year, slightly down from 2025. And total residential price growth is forecast at negative 0.94% in 2026. The headline number is not telling you everything drops. It tells you that the softness in some segment is expected to outweigh stability in others. Here is the split. Detached homes is forecast to remain the most stable segment. CREB projects 11,200 detached sales in 2026 and detached price growth of about 0.11%. That is basically flat pricing, meaning the market becomes more sensitive to condition, presentation, location, and pricing strategy. Great homes still sell, overpriced homes sit. Semi-detached are also forecast to hold relatively steady. CREB projects 2,100 semi-detached sales in 2026, with price growth around 0.78%. That is gentle, stable appreciation closer to a normal market. Row home, townhouses, that is where the forecast expects more pressure. Raw homes are forecasted at 3,700 in 2026, and a price growth is projected at negative 1.9%. The big theme is supply. More choice means buyers become more selective and negotiation becomes more normal again. Apartment condos are where the forecast expects the most downward pressure. Apartment sales are projected at 5,200 in 2026, with price growth around negative 3.5%. This aligned with supply story. More apartment-style rental and ownership supply takes time to absorb, especially with migration slowing. Now let's zoom out beyond Calgary because the region matters if you're considering Airdrie, Cochrane, Okotoks, Chestermere, High River or Strathmore, or if you're comparing value across markets. The report notes that many surrounding areas saw stronger price growth than Calgary over the past several years. Heading into 2026, the expectation is more balanced condition and more price stabilization in many of these markets, especially where new construction and resale inventory have grown. A few quick examples from regional snapshot in this report. There are 2025 benchmark price references that help frame where each market is starting from. Airdrie benchmark price in 2025 was about 532,000. Cochrane benchmark in 2025 was 578,000. Okotoks benchmark was about 617,000. Chestermere in 2025 was 706,000. High River benchmark 2025 was about 500,000. And Strathmore benchmark last year was about 436,000. The reason I share those is not to predict exact prices. It is to highlight that 2026 is expected to be a year where inventory levels and new construction completion matter more. In towns where new supply is more active, resale homes have to compete harder on price and presentation. Now, CREB also flags key risks that could shift the forecast. On the upside, the report notes that improving confidence and investments, particularly in regulatory barriers affecting the energy sector shift, could support stronger than expected momentum. On the downside, US tariffs and renegotiation of CU-SMA agreement could increase uncertainty, and weaker energy prices could reduce business investment. Here is how I would translate it into decisions in 2026. If we are a buyer, 2026 looks most favorable in condos and many townhouse segments. More selection, more negotiation, and less panic bidding. That doesn't mean every deal is good. It means that the buyer can be more selective and more strategic. If you are a seller, the market is more earned than given. In detached and semi-detached, price stability is supported, but your result depends heavily on correct pricing, clean presentation, strong media, and a sharp launch plan. In condos and townhouses, you need to price with competition in mind and expect buyers to compare options closely. If you're an investor, focus on fundamentals. With rental supply expanding, the best plays are properties with durable tenant demand, strong building quality, and numbers that still work with more conservative rent assumptions. If you want, I can turn this forecast into a local game plan for your exact situation, your community, your property type, and your timeline, using current competition and resale comparable sales to validate what the forecast is suggesting. Just message me, tell me your community and property type, and I'll send you a clear, practical next step plan for buying, selling, or investing this year. Thank you so much for watching, and talk to you soon.